So not breaking news on the White House, but on the House antitrust report, Mike, that we were expecting. And clearly there's going to be more pressure here, obviously, and more calls about anti-competitive behavior. The stocks are not moving a whole lot after hours. If you look at some of the big names like a Facebook or Google, Alphabet, or an Apple, down slightly. How big of a risk do you think this is for these stocks? Not the first time, but clearly ramping up ahead of the election.
No, that's right. I mean, this is not a new issue. The fact that we're getting movement in this process, though, is, maybe earlier than some people thought. I do think it's interesting, though, today, before the close, the big tech companies, did not trade well, even though, you would think they do better in kind of a risk-off environment where rates are coming down. So maybe this got into the market before the close, and that could explain why they're not reacting as much after hours. Look, this is going to be a long, drawn-out process, Sarah, whether the government decides to go down this path, how far they go down this path. And the reality is some of these companies, will do just fine in the post-regulatory world because their businesses are very strong. But it is another headwind. And I would argue that higher interest rates, which is our view over the course of the next 3 to 6 months, may provide a bigger challenge, quite frankly, for the valuation of some of these companies than even the regulatory risk. So we're centered on that more. It's easier to for us to forecast rates than it is for us to forecast regulatory change. But no doubt, this is not a positive, and it's just another headwind for why that rotation could gain momentum into the end of the year and into early next year.
Mike Wilson, thanks so much for joining us.
Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.